Oh, crypto's back. They are saying crypto's back. But look, when the markets are up, that's when you do your research. And when the markets are down, that's when you should be buying. And I told you guys a month ago, well, not a month ago, months ago, that we had hit the crypto bottom and it was time to start dollar cost averaging. But look, I'm not a financial advisor. I'm not giving financial advice. What I talk about is my investment thesis, how I behave when it comes to my investments, and in the hope that you can also like do your own research and come into the comments and tell me what you're doing and how you're approaching your investment thesis and what you're trying to invest in, so that we can all become financially independent and retire early. So welcome to the 49th episode of Financial Independence Retire Early. My name is Bird, and today we're going to be talking about the state of the cryptocurrency industry. They say Bitcoin's back. Look at that, 45,000 US dollars. Huh? So today we're talking about why they say the crypto's back, what other cryptocurrencies I participate in, and just how to approach the cryptocurrency industry in general. Okay? So like, comment, share, subscribe. Yeah, share with anybody else who you feel might find this valuable. And yeah, guys, like, let's get into 1,000 subscribers now. Let's get Bird to 1,000 subscribers. I really definitely appreciate that. So let's get right into it. Cryptocurrency and the state of the cryptocurrency industry. So Bitcoin's back, right? $45,000. And when I said we hit the bottom, we were probably like 22, 24, you know. So we're about 100% up from the crypto bottom that I called. And yeah, how did I mean, look, we hit the bottom because of what was saying Bankman-Fried and FTX and all of their thieving, and now we're back because of mostly three things. These are the three reasons why I believe the cryptocurrency market is coming back and why Bitcoin is so close to its all-time high. And number one is that FTX, Sam Bankman-Fried, Alameda Research, Binance, CZ, all of these people have gone through their court cases. So the cryptocurrency industry has kind of washed itself out of all its bad players. Look, not all of them, at least the biggest bad players, because FTX was one of the biggest centralized exchanges in America, and Binance is the biggest centralized exchange in the world. So these two, the American government and the American regulators have went right at them and forced them to start playing nice. FTX and Sam Bankman-Fried, have been found guilty of money laundering and a couple of other financial crimes, and Sam Bankman-Fried is probably going to go to jail for a long time, at least 20 years. And Binance and CZ have also pleaded guilty to money laundering and a couple of other financial crimes, and they have agreed to a $4.3 billion with the B dollar $billion fine, a $4.3 billion fine. That's how much Binance and Sam Bankman-Fried have agreed to start paying the American government and the American regulators. So there's a renewed confidence in the industry because at least the biggest players are being forced to now start playing nice and start playing by the book. So there's less fear of people stealing money, misappropriating customer funds, and kind of using the customer funds for their own benefit. So because the FTX case is like over and done with, and Sam Bankman-Fried is going to jail, and because the Binance case is also kind of recent out of court settlement, and CZ might not go to jail, but it's definitely paying a fine. People are like, okay, sharp, the worst is over. The bad players have been dealt with, or the biggest bad players have been dealt with, and now people are going to be forced to start playing nice and start playing right because they know that the American government at least is on their ass. So there's a renewed confidence in the industry because the biggest, baddest players are being brought to book. Okay, and look, Bitcoin is technology. Nothing has changed with Bitcoin as technology. Nothing has changed with cryptocurrencies as technologies. Nothing has changed with blockchain as technologies, but the human element of it. The bad players, the thieves, the manipulators, all those people are now being forced to start playing nice, at least by the American government. So people are now more comfortable putting their money in Bitcoin, in cryptocurrencies, because they know that at least the American government might protect them. And number two, which is also closely related, is close related to at least regulation, is the spot ETFs that Blackrock, Vanguard, State Street, 21 Shares, ARK Invest, and a couple of other companies are trying to apply for, or have applied for, and might be getting the opportunity to start to list their ETFs in the American Stock Exchange. And what is an ETF? An ETF is an exchange traded fund. Usually exchange traded funds are like baskets of shares that are related in one way or another. So in this instance, there's a basket of shares of people trying to buy Bitcoin through Vanguard, State Street, and Blackrock, and these are trillion-dollar companies. Look, Blackrock is worth $10 trillion. Vanguard is worth about $7 trillion. State Street is worth about $5 trillion. And ARK, 21 shares, all those other companies, also together, they're probably worth another $1 to $2 trillion. So there's at least going to be, if we just say 10% of the money that I just talked about, there's going to be another $2 trillion coming into the cryptocurrency industry. And the cryptocurrency industry right now is worth about $2 trillion. So you can imagine if there's going to be another $2 trillion coming into the industry. So we're looking at an effective almost doubling of the net worth of the cryptocurrency industry. And BlackRock, State Street, these are companies where the wealthiest people in the world, the wealthiest families in the world, the wealthiest countries in the world are putting their money. So Vanguard, State Street, these people are asset managers for the wealthiest families, the wealthiest people, the wealthiest sovereign funds, the wealthiest countries in the world. So with these people now applying for spot Bitcoin ETFs on the American Stock Exchange, there's now another sense of renewed confidence, at least by the wealthiest people in the world, that they can start owning Bitcoin legally, without people stealing from them, or without people manipulating them, or without people kind of like using their money for their own benefit. So, and the spot ETF is going to be following the price of Bitcoin 1-to-1, meaning if Bitcoin is sold at $60,000 on the, on the decentralized market, the spot ETF is also going to say that Bitcoin is worth $60,000, and they're going to be holding it 1-to-1 also, meaning if like the Saudi family says we want $100 billion in Bitcoin, BlackRock is actually going to go out and buy $100 billion in Bitcoin. They're not just going to say, okay, we'll hold you $100 billion for you. No. They say they're actually going to go out and buy this $100 billion in Bitcoin. So there's renewed trust, at least, that they will hold their Bitcoin 1-to-1, and they won't manipulate it, and they won't steal it, and they won't use it for their own benefit. So there's an understanding, a belief, or an assumption that trillions and trillions of dollars will be going to the market because of BlackRock, State Street, Vanguard, ARK Invest, 21 shares, and all of these other companies that are going to get ETFs on the American Stock Exchange, specifically Bitcoin ETFs. And some of them have applied for Ethereum ETFs too, but so this is like, people are like, oh, shoot, okay, if so much money is going to come in, at least by the biggest players in the world, then the cryptocurrency market has kind of reached another state of maturity, another state of safety. So now people are comfortable buying because they're like, okay, if a $2 trillion is going to come into the market, I'd rather get it now. It's another buy the news, sell the hype. No, buy the hype, sell the news. I'm getting it twisted. But I don't think people are going to be selling that much anyway, because once the money comes in, it's probably going to go up again. So people are buying to hold. People are definitely buying to hold. And if you know anything about Bitcoin, is that 50 to 70% of all the Bitcoin that has been mined hasn't moved in the past 2 years. People are actually sitting on their Bitcoin. Nobody's selling. Even people that are at a loss, like me, when I used to be at a loss a couple of months ago, I wasn't selling because I believe that the market is going to come back. And look at it now. Look at it now. And if you have been dollar cost averaging since I called the market, you're up 100%. But I'll get into that at the end. So that's number 2, right? Number 1 is all the court cases that are ending, and people are now confident that people are going to start playing fair. Number 2 is the spot ETFs that are coming, and people are confident that the richest people are going to now start properly getting their Bitcoin, so there's renewed confidence. But number 3 is the Bitcoin halving. What is the Bitcoin halving? So Bitcoin, or cryptocurrencies in general, are programmable money, digital money. So people are writing computer programs to create these cryptocurrencies, right? And these cryptocurrencies are created in a sense of what is called crypto mining. Mining is just like running algorithms, running cryptocurrencies on cryptic equations, cryptography equations on these computers, on these supercomputers, and the solving of these cryptography equations results in the formation of Bitcoin. And this Bitcoin and other cryptocurrencies come out in what's called blocks. So for example, just hypothetical sake, if you were running that program on a computer, running the cryptocurrency programs on a computer, you'd probably be getting like, let's say, 1 Bitcoin per block, right? But now with the halving, if you run that equation, you're now going to get half a Bitcoin per block. So it's an effective halving of the supply, or a halving of the program supply, meaning if you're going to halve supply but double the demand, basic economics, the price is going to go up, right? The demand is high, yet the supply is going down. So effectively the price is going to go up. So people believe that the price is going to go up because the demand is going up, but the supply is going down. And basic economics tells me that, okay, that means the price is going to go up. So these are the three things: the court cases, the ETFs, and the Bitcoin halving. So these three factors are pushing the market up. And people believe that these three factors are going to cross and hit synchronicity sometime March, April, May next year. So by March, April, May next year, we're definitely going to hit another all-time high. So people are preparing themselves for that all-time high. People are buying now, again, so that they can maybe sell at the next all-time high, or just buy and hold for the long term, like Bird. We're buying and holding for the long term. So these are the three main reasons why the crypto market is coming back up again, and Bitcoin specifically is shooting up so fast quickly, because now the cases are done. People are confident. The ETFs might be approved by the American government, so people are confident, and the Bitcoin halving supply is going to go down while demand is going up. So people are now more confident. But I mean, like I said, Bitcoin is not the only crypto currency. I classify the cryptocurrency that I own in three groups. There's the stores of value. Store of value is something like gold. You hold it to store your value of your money. You don't want to keep a lot of cash, so you buy gold because you assume that gold is either going to go up or stay the same. So you're storing your value. So I believe that Bitcoin and Ethereum are the stores of value, and I own Bitcoin and Ethereum as my stores of value. But they're also utility tokens. Utility tokens are tokens that have real-world functionality. Like XRP, which is used for cross-border payments. What's that? Cross-border payments is just transferring money from country to country. Cross-border payments, and XRP is pushing this cross-border payments. So the utility tokens are XRP, Solana, Polygon, ADA, Chainlink, and Polkadot. These are my utility tokens that I invest in, and I believe that as decentralized finance, as blockchain, as cryptocurrencies become more mainstream, these utility tokens are going to find value in the world, and therefore their value is going to go up because they will find functionality and utility in the world. So these are my utility tokens again: Solana, XRP, Polygon, ADA, Chainlink, and Polkadot. But I also have like high risk, high reward cryptocurrencies in the form of meme coins. Dogecoin is one of my favorite meme coin. I've spoken about it a few times before, but there's also Shiba Inu. Shiba Inu is also another meme coin. People call it the Dogecoin killer, but there's no harm in owning both. And the beautiful thing about Shiba Inu is like pathetically cheap right now. Shiba Inu is pathetically cheap right now, and with such a huge supply, and the burn rate keeps on increasing. The burn rate is like it's another way also of creating or killing the supply. So you are effectively taking the Shiba Inu out of circulation and reducing the supply while more and more people buy. So again, you reduce supply, but you increase demand, and the price is gonna go up. So those are my two high risk, high reward coins. It's Dogecoin and Shiba Inu. So again, I classify them in three things: store of value, which is Bitcoin and Ethereum; utility or functionality, which is Solana, Polygon, ADA, Link, Dot, and XRP; and then my high risk, high reward, which are Shiba Inu and Dogecoin. But the other macroeconomic situations that are happening, there's freeing of money in the sense that the inflation rate is going down, or at least it's remaining steady. So with inflation remaining steady, there's at least more disposable income, or there's a renewed sense of disposable income with people. So people might be using the disposable income to buy cryptocurrencies or to invest in cryptocurrencies because they have disposable income. And also the rates are being paused, right? The interest rates, at least the repo rates and some interest rates in America, have been paused. So with the pausing of the interest rates again, and inflation kind of remaining the same or going down, people have money to blow. And those who are going to invest their money, some of them might be investing in cryptocurrency. So there's more money coming into the cryptocurrency industry because of the interest rate pausing and the inflation kind of flattening out. So you see there's like a serendipitous effect of all these things coming together simultaneously at the same time, and these things happening simultaneously at the same time are pushing the cryptocurrency market back up. We're to a point where we're about 20% away from our all-time high, and we're probably going to break our all-time highs again by March next year. So people are buying to prepare for what's going to happen next year. And if you know anything about the Bitcoin halving, is that the price typically shoots up at least 300% or 3 times when the Bitcoin halving happens. So people are like, oh snap, it's gonna be halved. Oh snap, I have money to blow because of interest rates going down or remaining the same. Oh snap, Vanguard and Blackrock are gonna put 2 trillion in the cryptocurrency market. Oh snap, all these players now have the American government watching them, so they're gonna play fair. Oh shit, let's do this, or let's do it. And that's what's happening, in the cryptocurrency market. That is the state of the cryptocurrency industry today. And the truth is, like I said, the technologies haven't changed. People have continued working on technologies. People have continued building, developing the software, the programming, the money, and just, perfecting and improving their understanding of cryptocurrencies and blockchain as technologies. I said when the markets are down, you do your research. When the markets are up, you do your research. When the markets are down, you buy, you dollar cost average. And what is dollar cost averaging? Dollar cost averaging just means that, for people like some people that have like a fixed income, especially us retail investors, the day-to-day investor, if you have a salary and you get paid your 6K every month, you're like, okay, I will take 600 every month and buy Bitcoin no matter the price. Every month, I'm going to take my little 600 Rand and buy Bitcoin. Every month, I'm going to take my little 600 Rand and buy Bitcoin. And if you have been dollar cost averaging since January, or at least since I told you last year, September, you are up 100%. If you go to when I said the market has reached its bottom, and you start dollar cost averaging by the time I said the market reaches bottom, you're up 110%. Facts. Just by dollar cost averaging. You just close your eyes and you be like, look, I believe in this investment. I believe in this technology. I'm going to take my little 600 Rand every month and invest in cryptocurrency. You are up 110% right now. And I dollar cost average in most of my investments, whether it's shares or it's cryptocurrencies. Dollar cost averaging is one of the best ways to invest for us retail investors, because you just take your little 100 Rand, your little 600 Rand every month, and you buy. Whether the price go up or down, you just buy. The price goes up, you buy. The price goes down, you buy. When you have your little 600 Rand like it, the price goes up, you buy. The price goes down, you buy. And so you dollar cost average. And dollar cost averaging, I repeat, is the best investment strategy for retail investors, as day-to-day investors. So, yeah, man, that's it. I hope I'm very clear about what's been happening, and I hope I'm very clear about how to proceed, and I hope I'm also very clear about how to understand the cryptocurrency industry. Like I said, you have your stores of value, you have your utility tokens, and you can have your high-risk, high-reward tokens, but also understand how the government affects how people behave, understand how market players, Vanguard, Binance, FTX, State Street, understand how they play, and also understand how the market, in the sense of interest rates, inflation, how they also affect how people behave with their money. All right. So this has been the 49th episode of Financial Independence Retire Early, state of the cryptocurrency industry in December 2023. Like, share, comment, subscribe, and let me know how you're doing. Thank you for watching. Bye.